Welcome. Video 6. You're chugging along. We're basically halfway through this series. Break of structure. What is it? How do we use it? Why do we care about it? Well, break of structure is going to be the most used confluence you're ever going to learn. Is basically how you read what price is about to do when it either sweeps liquidity, whether you're in a trade and it's going to start reversing on you. It's how you read what it's telling you before it makes a huge move. So, in simple terms, it is exactly as it sounds. You are breaking market structure. So if we were in a uptrend, you are breaking below a low and going from higher highs, higher low, higher high, higher low, down to lower high, lower low, lower high, right? Continuing into a downtrend. Like I said before, price does not move just uptrend, straight downtrend. Sometimes you will get an uptrend, or a continuation, or not continuation, consolidation, and then a downtrend. But for this example, we're just going to be talking about this simple break of structure because odds are when we're using this, it's going to be on lower time frames. On higher time frames, like the 1 hour, we have a little consolidation here before we flipped around. You can see that there. But, like right here, you have a break of structure. Move down, then move up, makes a low, break of structure. Move up, move down, makes a high, and we start putting in a downtrend. So let's go back into the market on the 5-minute, because this is where it really gets crazy, and look at these break of structures. So let's just randomly go back here. Not trying to go to anything crazy or anything specific. Let's just, yeah, this looks good. Wonderful. So what is this right here? Well, we have a move up, then a move down, make a high, and then a move down, then a move up, makes a low, right? This is our previous high. Then what happens? Well, we put a move up and then a move down, making that our new recent high right here. Then what happens? Move up and move down, that's our recent high. Then move up, then a move down, that's our recent high. What's going on here, right? We're just following market structure. We're not freaking out here. You basically just have to digest what it's telling you and react upon that. And then what happens? We move down and move up is a low. Okay. And then right now we're like, hold on, this can continue lower, right? We are not marking out that low until we break structure. But we can look back and see that that is the low. Then in this period, we came down, move up, broke structure. This candle closed above this high, making that the break of structure. And now we can say that's the low, and now we're going into an uptrend. That is how you identify the break of structure. Now let's do some more examples because at first it could be a little confusing to follow it. And once again, let's go to the chart here, for the draw. Move down, move up, move down, move up, move down, and then if you have a move up, down, up, where's the break of structure? Is it here or is it here? It's here. Why? Because that is the most recent high. This break right here is what we'd be looking at. That is our new low. That is our new high. And now we're waiting to continue this trend. But if this is a liquidity sweep on a lower time frame, then what are we going to be doing? Well, we're going to be breaking up and then breaking back down, which is completely fine. And that is why we're patient with day trading, because the second you see a green candle go up above a high, it might not actually be a complete break of structure and turning around and, oh my God, the world's ending. It could simply be a liquidity sweep. Just like, let's say, move up, then move down right here. We broke structure just barely and then push back down. Liquidity sweep. That's the difference, is finding a break of structure is something that you do when you're looking at it at a key level. So, for example, let's say this right here, this line right here, we want to see a break of structure that we are going to reverse on that liquidity sweep. And what do we get? We get a move up, move down, and then a move up, move down. We have this high right here. Move up, then move down. We have that high. And then move down, then move up. Creates that low. Bam, we broke through that low all the way down, which means that we did reverse on that period, on that liquidity sweep. Because we broke structure, meaning that we started a new trend. We started trending down off of this sweep. Go to another one. This is not scripted. This is just happening in real time. Right here. Move down. Bam. Swept liquidity. Move back up. Now, we're going to get into inverse fair value gaps in a minute, but technically this would be our sign that the market structure has shifted because we inverse the fair value gap. But let's say we don't know about fair value gaps yet, and we want to see a break of structure from a high. Where do you see the high? I'll let you guys point it out. You see it? Right here. Move up, move down. High. Where do we break structure? Right here. This candle closes above. Remember that. Closing above. Because why is that important? Well, here, I'll show you. If you see, let's see, this right here. Are we? No. Yeah, let's use this one. All right. Do you see this here? What is that? That makes a low. Actually, we didn't come below that. Sorry, that was a bit exam. Here we go. Perfect. Wonderful. 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 I don't know. Yeah. Is this a break of structure? Is it? We have this high right here. Move up, then move down. Is that a break structure? No. Why? Because it's just a wick. Wicks can go up. What is that? Really testing you guys here. What is a wick above a high? Liquidity sweep. Even happens on low time frames. Would we be looking at that as like, oh my God, we're going to enter? No. Unless we already swept liquidity, we're going to get into that in a bit. But what is that? Nothing. Fine. Continue your life as normal. Where do we see the break of structure? Do you see it? I'm going to outline a box. Do you see the break of structure within this box? I'll give you a couple seconds. Do you see it? I hope you're pointing to this. Right here. That candle right there broke structure. Why? Because we went down. You might say we were already in a downtrend. No, we weren't. Why? Because this right here. See this? Move up, then a move down. What does that put in? High. What is this? Break. What is this? A new high. You following? What is this? The new low. Cool. Now, broke structure back down. That is why you always need to be on the ball with this. Because if you thought right here that we were in a downtrend and you entered a trade, we had a very good possibility to just continue higher and putting in bullish order flow. But we didn't because we broke back down. Now, here is something crazy. We're going to get into in a bit. But let's mark this out. I guarantee you this was a retracement on a 15-minute. Tell me I don't know what I'm doing. Retracement right here. Bam, equilibrium. We're going to get into that in the next video. Actually, it is the next video. That's going to be a great one. Basically, it tells you how we can continue that trend. So let's keep going. More examples because it's easy. I'm just showing you examples because it is something very important to know. And something I would suggest is go into your trading view and just go back in time and just look at it. Break structure, break structure, break structure. Just look around. It happens all the time, every time frame. Shit, like we've been on the 5-minute. Let's go to the 1 hour. Really get interesting here. What do you see? See anything? All right, we're gonna do a little pop quiz here. Ready? Let's right here. Where's the break structure? You guys probably already found it because you're geniuses. Where is it? This candle? Correct. For the move up. Where is the move down? Where is the break structure to a downtrend? Where is it? You guys are so smart. It is right here. Because we broke this whole shabam right there. This candle. Wow. Oh my god, what is going on? Hold on. Gotta do sign language to my fucking camera. Is it still following me? What are you doing? There we go. Alright. Bam. That is basically a breakup structure. This 12-minute video. It's pretty simple. I could have done this in 2 minutes. I wanted to give you guys some good examples. But basically, it's when you're in an uptrend or a downtrend and you break structure to the downside or the upside. Depending on the trend, you're basically reversing. It is a reversal confluence. So, reversal confluence. Write that down. If you're taking notes, well, you should be. If you're not taking notes, just fucking go back to Netflix or something. Taking notes. Identifying break structure. Right above it. Like right with your pen. Write reversal confluence. Because that's what it is. It's telling us, hey, price probably going to reverse. This next one is going to be using break of structure, but it is going to be talking about how we can use a break of structure to continue higher. Continuation. Using fair value gaps and equilibrium and break of structure. It's going to be a good one. Tune into that one. It's going to be a good one. So I'll see you there.